And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And good morning. Happy Wednesday, January the 26th. This is the Market Forecast. I'm John Hoagland. Thanks for trusting me with your time. We got some interesting things going on in the markets. We're going to take a good look at some of these charts, see what we see. As always, seeking context, good risk management, and patience. If you're already in the markets, again, hopefully they're heading your way. Economic information this morning. At 7:30, the international trade numbers came out. They were looking for an outlay of $96.1 billion. Came out considerably higher than that, $100.9 billion. Retail and wholesale inventories were also out at 7:30. They were preliminary numbers, so probably not going to be all that impactful. 9 o'clock Central Time, we have new home sales, 9:30 EIA Petroleum Status Report, and of course, what everybody's waiting for, the FOMC announcement. U.S. stock indices are set to open higher off strong Microsoft earnings yesterday, which bodes well for the rest of the tech sector. We had some everything I'm seeing from the tech sector is they're doing really well as far as earnings per share, as well as revenues. Fed Day today, no expectation for policy changes here just yet. A lot of investors will be looking for hints into the timeline for coming rate hikes and changes in policy. As far as earnings today, this morning we saw Abbott Labs, AT&T, and ADP already come out. After the close, back to the tech sector, we're looking at Tesla and Intel. Crude prices are higher on pretty much everything, technicals, fundamentals, and geopolitical information. The API yesterday showed a 0.8 million, an 800,000 drop in inventories. We're going to have to see what happens for us today with the EIA Petroleum Status Report. As usual, you want a good day, hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. You can subscribe to our YouTube channel so you get notifications when we do go live. A brief look this morning at the VIX, the dollar index, and the 10-year yield. VIX down 8%, 28.41. You get the markets heading back to the upside, the fear factor subsides, and that's really what that VIX is the fear factor. Dollar index up slightly, 96.14. The yield on the 10-year, a little bit of an uptick, 1.78% off of yesterday's close, just up a little bit. It's going to be an interesting trading day. I did put in hurry up and wait because there's going to be a lot of posturing, a lot of hedging, and a lot of traders looking for just to protect themselves if anything unusual does happen with the FOMC announcement. We do have to remember with the geopolitical situation the world is in right now, we are really keeping our eyes on any headline news. Headline news is likely to create swift market moves, if you will. Be prepared. Use your stops. You got to protect yourself. Always wear a stop. And we're going to see what we see here this morning. You got to say good morning to everybody. Sean, first in the room, you win the prize. My brother Rick, good to see you. I love you. Dead letter opener, happy Australia Day. Good morning, Zorain. Devant, 100 points higher. Insert descending sound effect here. Well, we're going to have to see how that plays out. Good morning, Chris. Yes, don't forget to be flat and funded accounts as well as step 2 accounts. Good morning, Jim. Good vibes to you as well, David. I love that. It makes me think of the Beach Boys' Good Vibration. I was going to play that a little bit this morning when the forecast opened up, but I don't want to get any copyright issues. Devontae, how can the settlement price be implemented in my trading strategy? We're going to take a look at one way to see that as a potential profit target / entry. And you're right, dead letter opener. I mean, any kind of level that you're looking at that other traders are looking at does offer you the opportunity to limit risk. But we're going to take a look at one way this morning. Great question. Robert, good morning. Drew, good morning. Mirik, Jeff, good morning. Galen, my friend Vince, good morning to you, sir. Keith, good morning. Keith, fix it. I think I might know who you are. Bill, good morning. Ryan, Kevin, Brian, good morning. Now I lost my place. Three Lions Insight, good morning. Ricardo, Allen, Sarah, good morning. Manuel, good morning from Germany. Guten Tag. Andre, Jerry is awake. Hope John is too. Love the hurry up and wait. Well said. Yeah, now do it, right? It's hard to just be patient and wait for the right opportunities. Rob T, Trading Research, good morning. Alessandro, good morning. Robert, Expediter, good morning. Mentally Gone, I like that name. First time in this chat, loving these market forecasts. Good. Thanks for chiming in, letting us know you're here. Welcome. We're glad you're here too. We are looking forward to your success. Andy, Ryan, 1 p.m. Central. Yes, before 1 p.m. Central and a minute afterwards if you are on step 2 or in a funded account. Johnny, good morning. Bill, Dr. VJ, good morning. Nico, Adrian, Juan, and Steven. Adrian from Austin, probably a lot warmer than it is here. Just the last time I looked, it was -6. We got somebody here from Lombard, Equanimous Trading. Or was that, hang on, wait, where is he? Where is he? Yes, Equanimous Trading from Lombard, Illinois. It's -8 degrees there. Still going to the Bulls game tonight. Way to go. Don't let the weather hold you back. That letter opener got engaged this past weekend. Didn't help trading results the last few days. Yeah, big changes in life can kind of change our decision-making process a little bit. Congratulations, first of all, and take your time. Let yourself get used to the idea that you're going to get married. God, congratulations. That's great. Daryl, greetings, everyone. What in the heck is going on? Well, we've got a lot going on in these markets. We're going to take a look now, starting with the S&Ps. Got about 5 minutes. We'll watch the open in crude oil, which could be a crucial one because crude oil is opening way out of balance, technically, fundamentally, and politically moving higher. So let's go ahead and get set up. And let's see what we're seeing here. Let me get the daily. Now we are good. Let's see. So, all right. We have yet to close below weekly kickoff low. Settle, that is. We had that drive down below that where it looks like it closed on the daily chart below that. We still have tremendous excess down below this level. What I'm really liking about this is the fact that on this push to the downside, we lost volume. Okay, volume did not increase in the downside auction process. It started to cut off. We also lost 30,000 in open interest. So a lot of traders kind of thinking, or at least for the time being, believing that the low might be in. Now, obviously, with a little benefit of Microsoft yesterday, some positive earnings, we've got the market heading back in the upward direction, which would be considered the right direction, I think, if you're thinking of your investments and that kind of stuff. So, a little bit of help from earnings goes a long way, it looks like, especially as extended to the downside as we are. I mean, let's take a look here. 10% off the all-time highs. Some would consider that correction territory. Back to the daily here. Got a big day of data and a big day of data tomorrow, too. We got the GDP numbers coming out tomorrow. Before the FOMC meeting, and this kind of lends to the hurry up and wait, I'm going to try and remember there's a lot of information coming out later on. A lot of folks will be waiting for that information, posturing and hedging for that information. So I'm going to keep my expectations for the regular trading hour session reasonable prior to that FOMC release. I'm going to take it easy. We're going to take a look at the 30-minute chart and see what we're looking at. All right, so back to this is the 30. We may or may not be opening with a gap above yesterday's regular trading hour session, maybe even above this week's regular trading hour session. And we are holding some pretty big overnight longs. Why do I say that? Because the 5 o'clock open started here. It left the opening range at the low of the session. So we're looking at the volume here mainly. We're looking at shorter hands, weaker hands, shorter time frame traders that are holding this expectation for a continuation to the upside. Okay, now let me Devante. When we know that we've got a whole bunch of short time frame, weaker hands traders long, what they're looking for, what are they looking for? They're looking for continuation of upward momentum created when the U.S. regular trading hours open. Okay, so there is the possibility, if there is a gap close, of them getting a little bit nervous and saying, okay, it doesn't look like we're going to get what we're looking for. We're going to get out, and they get out en masse. And sometimes the market will that's enough to push the market back towards settlement. In an upward market, settlement can be an interesting opportunity for us to look for a long in the right context. Is today the right context? It's kind of early to tell. We do have information. I'm looking to keep my expectations reasonable for profits, for momentum and anything like that early in the session today. Now here's another kind of view of that, Devante. We have this down day here. We settle here. We start a little bit long. We end up a little bit short by the time the market opens. Our short time frame traders get what they're looking for. Okay, they get momentum in the opposite direction. There's probably a lot of them that are leveraging into this because they're thinking, okay, this is it. We're going to zero. They end up too short in the hole here, and by the end of the session, the market price brings the market brings price back up to settlement from the previous day. Yesterday we had some longs. We had some shorts. Here's settlement from Monday. We had some overnight shorts that started to get paid, but where did the market return back to? Settlement. Okay, so when like Dan says, the market is like rubber bands. If the rubber band gets extended too far, it's going to snap back towards the center. And this settlement could be considered the center. We've got weekly kickoff low. We've got headline risk. We've got FOMC. We're going to open with a gap. If we can't close the gap relatively early, that may incite some buyers to come in and continue this market higher. We do not have a late spike. So it's all really about the overnight inventory and the gap close prior to FOMC for me today. Okay, now let's take a look at crude oil. We had a kind of a weak breakout yesterday of the bull flag. It's still registering as a breakout. We added 25,000 in open interest during yesterday's session, although volume was a little bit lower. There's, as we are, I'm sure, all aware, there's tensions with Russia, there's tensions with Iran. EIA is expecting a 700,000 barrel drop in inventories today. It's not a huge thing, but this market is really being driven by the supply or the lack of supply. It's being driven by that. Upside structure hugely intact. Breakout above weekly above bull flag intact. We're good there. Look at the market now. All right. We've got some considerable overnight longs here. This is last week's high. What are we looking for if we are a trader that is holding longs from overnight? We're looking for continuation. We're looking for regular trading hours, session buyers to come in and take over and push this price higher. We'll look at the 1 minute opening range. Okay, this market is opening out of balance. It may be important to be involved earlier because the market is out of balance. The opening range, 46.87 to 01, so we're looking at 14 ticks. We've taken one little look above it, but we have not really found direction. Sometimes the market will get you long above it, come down, take out the stops, and then figure out where it's going to go from there. This is important to watch where the opening range, if the opening range remains the low of the session, we're going to probably, that would indicate continual buying or continuation of buying coming in, making all of our overnight longs feel all warm and fuzzy until they don't. Looks like we're about to take out the low of the opening range after taking out the stops just above. So we're going to have to watch and see how this goes. We will come back to the crude chart here as we go along and see what's happening here. If the overnight longs start to get nervous, it's almost like, Jim Dalton, I think, has a really good way to look at this. All of those longs right now are at a really good party. It's a really good party. Everybody's having fun, but everybody's well aware that there's the risk of a fire. And here comes the fire. They're all hanging around the door. The door represents the bulk of their stops, at least the beginning of their stops. All it takes is one or two people to go running for the door in this situation to alarm the entire party that a fire may have started. If that's the case, then they're going to pile over each other to get out of that room, out of that party, because they think that there's a fire. So if all of these longs start to think there's a fire at the party, they get out en masse, which could give us an opportunity to look for a long at better trade location. That's why we watch that opening range. Nasdaq. Again, excuse me, on this push to the downside, we saw volume dwindle. We didn't lose open interest on this down move. We actually added 1,400 in open interest. So there's a little bit different. I mean, we're looking at the 15% pullback in the Nasdaq while we're wrestling with the 10% pullback in the E-mini S&Ps. The Nasdaq has been the weaker of them. We getting good news from the tech sector could be a boon for a new move to the upside. We don't know what's going to happen. God, I wish and pray that one day I'm going to be able to tell you all exactly what's going to happen, but nobody can do that. We don't know what the future holds. This is an ambiguous endeavor. We got to take the tea leaves and look at the nuances and see what we see and try and make profits on it. A lot of help from earnings yesterday. Remember, we got more earnings later. We have headline risks. We have FOMC today. I'm going to, again, thinking I want to be reasonable in my expectations and profits here. Take a look at the 30-minute chart. Okay, we have overnight longs again. We are now holding back above weekly kickoff low. Once we got back above it, it provided a degree of support in the overnight session. Sellers were no longer willing to sell it at that level. We got a continuation. We may be opening with a gap. Okay. It's all in, what happens after the open. If we can't close the gap, if buyers come in and take control and bring this market higher, then all of our overnight longs are going to be happy. If that doesn't happen, at some point, they're going to pull this market back. An opportunity at weekly kickoff low proved to be beneficial to our longs last night on 2 occasions. But we got to be careful. If there's not a gap close, we know that the opportunities are to the upside. If there is a gap close, we're going to be looking for areas of support, and those areas of support can be value high, they can be settlement, they can be value low if we can't hold weekly kickoff high. So weekly kickoff high in the Nasdaq is going to be somewhat pivotal for us today. In other words, we want it to hold above if we're long. If we break down below it with any momentum or volume, we're going to maybe see an opportunity for the short side, but I'm thinking I'm going to probably try and be patient, wait for the market to establish a range and then work the extremes. Anything that happens early is important because we are out of balance and out of range. Gold. All right, so we have, this is the last day trading February. By tomorrow, you should be trading the April contract. We go right past March. We go right into April. March is what they call kind of a bastard contract. The volume is about half of what Feb is in April. So by tomorrow, that's going to switch. April tomorrow again. Volume was not impressive for a potential breakout above a bull flag. Here's the last bull flag breakout. We put in some really good volume. We created another bull flag, not great volume on the breakout. Now you see us retesting back down to the trend line where that breakout occurred. Overall, we have an inside extended trading hour day. Yesterday's, extended trading hour is outside of this morning's extended trading hours. Take a look here. Well, we did add 15,000 in open interest on this breakout, which is a little bit encouraging for possible continuation if we can bring some participants into it. 27,000 were added in April, 13,000 lost in February. So that 15,000 could be kind of viewed as directional information, directional participants. Remember when we're in rollover, some of our major players are more interested in getting a cheap roll than being directional. That may have changed yesterday. All right, so here's settlement. We have a lot of overnight shorts in this market. The market has taken a look above, I think, the opening range. It did not hold. Now we've got some more sellers coming into this market. This trend line here offers the opportunity to limit risk. It may or may not hold. Nobody knows. But this is right where that breakout occurred yesterday. If you were watching after the market forecast, the market hung here, and then pow, it just went. Now that's an encouraging factor for a continuation of a breakout. The market rallied, it came back, tested that level again, tested it again, and then finished on the high. No late spike or anything, but that was an encouraging close. Now we've got the market coming back, looking for possible areas of support, and this trend line offers that. Again, If it gets too deep past this trend line, the trade may be invalid and we need to get out. But if this does hold, we've got all of our overnight shorts. And if we've run into new buyers down here, that's going to be a powerful situation where all these shorts are going to finally get the idea that they're not going to get paid. They're all going to turn buyer, and it could be a swift move back right up to settlement. Nobody knows for sure. This is hypothesis and probability. That's all we have to look at. The only thing we know for sure is how much we're willing to risk. Risk technically, not financially. If we get too deep below this trend line, the trade may be invalid, and we gotta reassess and look for new opportunities. And we opened in range and in value, so that kind of takes the opening range trade off the table because we opened in range and in value. Small change in the perception of value of gold at that time. We're testing away from that. We've got a lot of overnight shorts here. If we can't see sellers continue to push below this trend line, there's maybe a decent upside opportunity for us here. I'm going to be very interested to see how that plays out for us, and then we can talk about that on the recap because, speaking of recap, there won't be a recap today. We've got the Top Step Trading roundtable today. There's 5 of us that are going to be sitting around discussing trading psychology. Some very good, very smart traders are going to be with us. So, all right, let's take a look at the euro now. So, yeah, no recap today. We'll have to recap what happens in that gold trade tomorrow. We'll see what happens. Euro volume just maintaining. Open interest stagnant overall. We lost 4,200 in open interest on this push down below weekly kickoff low. I find that to be somewhat interesting. Changes in either direction means something. We are, where are we? We continue to test the weekly kickoff low 1, 2, 3 days in a row. It's been penetrated. It has not been accepted. This area between these lows here and weekly kickoff there's some fish here. Direction unknown. Let's take a look here. We did end up putting in a late spike in regular trading hours yesterday. Settlement is up here. Settlement 113.15 and a half ticks. Got a lot of overnight shorts here. Look what's happening. Okay, we tested below weekly kickoff low. Value kind of spanning that. Unable to continue the push to the downside. This is probably our short time frame overnight short traders, weaker hands traders, pea shooters like me, all bailing out at once. They can take price all the way back up to settlement before they've reconciled those positions, depending on who's present. So again, this is another spot here where it seems like weekly kickoff is going to be somewhat pivotal. Be careful. You don't want to get stuck in a situation where it may become magnetic when you're long above, short below, long above, short below, long above, short below. That can chew you up. We'll have to see how this plays out. There was an attempted acceptance of price below weekly kickoff yesterday that was rejected. Look at all the overnight shorts here. Unable to bring price all the way back to settlement, but a decent pullback, after the open. The longer time frame did not show up to sell it. We end up heading in the other direction and leaving a late spike. We've opened below the late spike. That should be acceptance of lower pricing. Doesn't mean that the market can't come back up and retest this level. All right. The 10-year continues to be very indecisive. Of course, it's Fed day. It's waiting for information. Inside extended trading hour ranges, inside day yesterday, inside day today. It's waiting for information. It's coiling, probably building some energy. We added another 37,000 in open interest yesterday, which is substantial. Not so much for the 10-year. It's the market is that thick. That open interest increase just brings more energy when there is a change in the market state. We've got doji. We're kind of sitting in a doji now. This market is just waiting for information. 1 o'clock, it's going to get it. Going to focus on really the 3-day balance extremes for opportunities today. Here's the 30 balance extreme down here, balance extreme up here. Anywhere in the middle, I'm not that interested. If we had an opportunity to look for a long before the open, God bless you. It's a valid trade. Rejection, 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 rejection. In the middle, not interested. Up here, I'll be interested in again. The 3-day range here, especially before 1 o'clock, might be useful for us. And nat gas. So there was a question that was sent to me about, is nat gas, are the buyers in natural gas confident? It's in rollover still. We lost 10,000 in open interest yesterday. Volume is blurry. It's very difficult to gauge volume and open interest and what it means to the market when the market is in rollover. What direction is the market attempting to go? It's attempting to looks like it's attempting to go higher. How good of a job is it doing getting there is the question. And when you're not getting information from volume, open interest, any of that, maybe there's some information for us on the TPO charts. Here's the Monday, Tuesday. This is last week. Okay, we have a double distribution trend day. We open inside it and we leave. We have a week high on Monday. We open, we put in the low, which is a poor low at the low here, but it's at the low of value. That's, there's a lot of exactness there, which says that this is not a very strong low. But for the second day in a row, we have a week high. There's no excess. This is a strong bottom, a strong low, because the market didn't spend a lot of time there. Anytime the market does not spend a lot of time on an extreme, you're going to get these tails. These tails represent excess, where price got too cheap or opened too cheap. Buyers took over right away and continued to push the market higher. Yesterday, buyers balanced here. We have a double distribution trend day, which means there was balance here, and then there's balance here. We have week high and a week low, but the consecutive week highs, I think, as a nuance, usurp the poor high from yesterday. It was a double distribution trend day. Technically, we have excess between these areas of balance. So this is excess, that this was too cheap. We drove price higher and accepted higher. Now look where we are. We're all the way up here. You can see that on the 30-minute chart. So part of, that's not the 30, this is, part of the rollover has made this opportunity blurry for us because it's difficult to gauge open interest and volume. We lost 10,000. 6,000 of those were in the March contract. So the 4,000 of it was in the expiring February contract. What does that mean? It's difficult to read. We've got tomorrow is the last trading day for Feb, and that's going to help us clean up the fact that we can depend on volume and open interest information. So we've got, a pretty decent move. We've got overnight longs here. We're seeing the market continuing to push higher. $4.10 is weekly kickoff high. The market has begun to see that as supportive. Buyers seem to be protecting that level. If they don't protect that level, there is a lot of overnight longs in this market. I want to see them protect this level. The next stop that we would look would be this trend line here. We got 1, 2, no real good, multiple points of contact, but it just kind of holds the channel or the dannel, if you will. And boy, it's tough to buy it up here, but sometimes it's the right thing to do. Sometimes buying big gets more buying, and weekly kickoff level here. If we do have longer time frame traders that are interested in directional and need to adjust inventory, this is a day where that is entirely possible. All right. So all right, I see we've got some questions here. Yes, Rick, 40 years of wedded bliss. I'm on 25 years. Excellent. Yeah, stops are for breakout situations or situations when if price gets here, I'm buying or selling it here. Using stops for entry is a useful tool. Maybe I learned that from my brother Rick. Usually better off going to a movie on Fed days, right? All right. CL worked nicely just now for a 2-to-1. Nice. Glad to hear that. Devont, the opening range trade on CL worked nice. Okay, good. Good. I got a couple of folks taking care of that. The roundtable will be recorded. I'm not sure when and where it will be published. I will let you know. Jim, go skiing. Absolutely. I authorize you. If you need authorization, I've authorized you. What's going on with gold? Oh! Well, our trend line there did not really hold, did it? Boy, it popped above it yesterday, and wow, popped up back down below it today. It's almost like something happened here. All right. Well, we've got about 6 minutes before the open. Take your deep breath. Have a excellent trading day today. Be careful, be cautious. Obviously, our support level there did not play for gold. Luckily, it was at a level where we can really limit our risk. Those are the trades that I like. So we will be. I've got the foundations today. I got group coaching today, and we've got the round table. And so get a lot of opportunity to spend some time with you today. I look forward to that. I'm going to have to figure out how we're going to take a little bit of a break to watch the FOMC come out and see what happens, but we'll have to see how that goes. All right. Get out there and profit today. Have a great trading day. Trade well. And I look forward to seeing you later on. Again, no recap today, but so if you're not going to be joining us for the other events today, we'll see you tomorrow for the market forecast, 7:45 a.m. Trade well today. I'll see you in the proverbial pit here shortly.